Financial planning is the process of creating a roadmap for your financial future by setting goals, analyzing your current financial situation, and developing a plan to achieve those goals. It involves creating a budget, managing debt, saving for emergencies and retirement, and protecting your assets and income through insurance. Financial planning is important because it helps you achieve your financial goals, whether it's saving for a down payment on a house, paying off debt, or preparing for retirement. It also helps you manage your money effectively and make informed financial decisions. By having a plan in place, you can better control your spending, reduce financial stress, and improve your overall financial well-being. Before we dive into today's topic, if you haven't already, please consider subscribing to our channel so you don't miss any of our future videos on financial planning and other personal finance topics. We post new videos every week, and our goal is to help you improve your financial well-being and achieve your financial goals. So, hit that subscribe button and let's get started. Explanation of the importance of setting financial goals. Setting financial goals is an essential part of financial planning because it provides direction and purpose for your money. Without clear goals, you may end up aimlessly spending your money without achieving anything significant or making progress towards your long-term financial aspirations. Having financial goals helps you to prioritize your spending and make informed financial decisions that align with your objectives. It also provides motivation and accountability to stay on track towards achieving your financial aspirations. Setting specific and measurable financial goals can help you quantify what you want to achieve and track your progress towards achieving it. For instance, if your financial goal is to save $10,000 towards a down payment for a house within the next 2 years, you can break it down into smaller, measurable targets and track your progress towards achieving them. Ultimately, setting financial goals helps you to take control of your money and ensure that you're making the most of it to achieve the things that matter most to you. Assess your current financial situation. Assessing your current financial situation is a critical step in financial planning because it helps you understand your current financial position, identify areas of strength, and areas where you may need to make changes to improve your financial situation. Here are some key steps to follow when assessing your current financial situation. Determine your net worth. Your net worth is the difference between your total assets, what you own, and your total liabilities, what you owe. This will give you a snapshot of your current financial situation. Understand your income and expenses. Review your income and expenses to understand your cash flow and identify areas where you may be overspending. Identify areas where you can reduce expenses. Once you have a clear picture of your income and expenses, look for areas where you can reduce expenses to free up money to achieve your financial goals. Review your credit report. Check your credit report to ensure that there are no errors or inaccuracies that may negatively impact your credit score. Assess your financial habits. Consider your financial habits and identify areas where you may need to make changes to improve your financial situation. For example, are you living paycheck to paycheck, or are you saving enough for emergencies and long-term goals like retirement? By assessing your current financial situation, you can identify areas for improvement and develop a plan to achieve your financial goals. Create a budget. Creating a budget is a fundamental aspect of financial planning because it helps you manage your money, prioritize your spending, and achieve your financial goals. Here are some key steps to follow when creating a budget. Track your income and expenses. Start by tracking your income and expenses for a month or two to get an accurate picture of your spending habits. Use a budgeting app or a spreadsheet to keep track of your transactions. Categorize your expenses. Group your expenses into categories, such as housing, transportation, groceries, entertainment, and so on. Set spending limits. Once you have categorized your expenses, set spending limits for each category based on your income and financial goals. Make sure to allocate enough money for your necessary expenses and savings goals. Review and adjust your budget. Review your budget regularly to ensure that you're staying on track with your spending and savings goals. Adjust your budget as needed to reflect changes in your income, expenses, or financial goals. Use tools to help you stay on track. There are several budgeting apps and tools available that can help you create and stick to your budget. Consider using one of these tools to make budgeting easier and more effective. By creating a budget, you can take control of your money and make informed financial decisions that align with your goals. A budget can also help you identify areas where you may be overspending and make adjustments to improve your financial situation. Establish an emergency fund. Establishing an emergency fund is an important part of financial planning because it helps you prepare for unexpected expenses or income disruptions. Here are some key steps to follow when establishing an emergency fund. Determine how much you need. A good rule of thumb is to aim for at least 3 to 6 months' worth of living expenses saved in your emergency fund. However, the exact amount you need may depend on your personal circumstances and financial situation. Set up a separate savings account. Establish a separate savings account specifically for your emergency fund. This will make it easier to track your progress and avoid spending the money on non-emergency expenses. Set up automatic contributions. Set up automatic contributions to your emergency fund savings account to make saving easier and more consistent. Prioritize your emergency fund savings. Make saving for your emergency fund a priority, even if it means cutting back on other expenses or delaying other financial goals. Use your emergency fund only for emergencies. Use your emergency fund only for unexpected expenses, such as a job loss, medical bills, or car repairs. Avoid dipping into your emergency fund for non-emergency expenses. By establishing an emergency fund, you can prepare for unexpected financial challenges and reduce your financial stress. Having an emergency fund can also help you avoid going into debt or using high-interest credit cards to pay for unexpected expenses. Manage debt. Managing debt is an important aspect of financial planning because it can impact your credit score, ability to save for long-term goals, and overall financial well-being. Here are some key steps to follow when managing debt. Track your debt. Start by tracking your debt and understanding your current situation. Make a list of all your debts, including credit card balances, loans, and other obligations. Prioritize high-interest debt. Prioritize paying off high-interest debt first, such as credit card debt, because it can quickly accumulate and become more difficult to pay off over time. Create a debt repayment plan. Create a debt repayment plan that includes a timeline for paying off each debt and a budget that allows you to make regular payments towards your debts. Negotiate with creditors. If you're struggling to make your payments, consider negotiating with your creditors to lower your interest rates or payment amounts. Avoid taking on more debt. While you're working to pay off your existing debt, try to avoid taking on more debt. This may mean cutting back on non-essential expenses or finding ways to increase your income. By managing your debt effectively, you can improve your financial situation, reduce your stress, and achieve your long-term financial goals. It's important to make paying off debt a priority and develop a plan that works for your individual situation. Start saving for retirement. Starting to save for retirement early is an important aspect of financial planning because it allows you to take advantage of compounding interest and grow your retirement savings over time. Here are some key steps to follow when saving for retirement. Set retirement goals. Start by setting clear retirement goals, such as when you want to retire and how much money you'll need to live comfortably in retirement. Choose a retirement account. Choose a retirement account that fits your needs, such as a 401k, IRA, or Roth IRA. Each type of account has different tax implications and eligibility requirements, so be sure to research your options and choose the one that's right for you. Determine how much to save. Determine how much you need to save each month to meet your retirement goals. A financial advisor can help you determine an appropriate savings rate based on your age, income, and retirement goals. Start saving as soon as possible. Start saving for retirement as soon as possible, even if you're only able to contribute a small amount each month. The earlier you start saving, the more time your money has to grow through compounding interest. Review and adjust your retirement plan. Review your retirement plan regularly to ensure that you're on track to meet your goals. Adjust your plan as needed to reflect changes in your income, expenses, or retirement goals. By starting to save for retirement early and consistently, you can maximize your retirement savings and enjoy a comfortable retirement. It's important to prioritize retirement savings and make it a part of your overall financial plan. Protect your assets and income. Protecting your assets and income is an important aspect of financial planning because unexpected events, such as accidents, illnesses, or job loss, can quickly derail your financial goals. Here are some key steps to follow when protecting your assets and income. Get insurance coverage. Get insurance coverage that fits your needs, such as health insurance, disability insurance, life insurance, and homeowners insurance. Insurance can help protect your assets and income by providing financial support in the event of unexpected events. Create an estate plan. Create an estate plan that includes a will, power of attorney, and other legal documents that specify your wishes for how your assets should be distributed and who should make financial decisions on your behalf if you're unable to do so. Consider setting up a trust. Consider setting up a trust to protect your assets and ensure that they're distributed according to your wishes. A trust can also help minimize taxes and avoid probate. Review your investment portfolio. Review your investment portfolio regularly to ensure that your assets are properly diversified and aligned with your risk tolerance and financial goals. Take steps to prevent identity theft. Take steps to prevent identity theft, such as monitoring your credit reports regularly, using strong passwords, and being cautious about sharing personal information online. By protecting your assets and income, you can help minimize the impact of unexpected events on your financial goals and reduce your financial stress. It's important to work with a financial advisor or attorney to create a comprehensive plan that meets your individual needs and goals. Monitor and adjust your plan. Monitoring and adjusting your financial plan is an important aspect of financial planning because your financial situation and goals can change over time. Here are some key steps to follow when monitoring and adjusting your financial plan. Review your plan regularly. Review your financial plan regularly, such as once a year or after major life events, to ensure that it's still aligned with your goals and priorities. Track your progress. Track your progress towards your financial goals, such as saving for retirement or paying off debt, to ensure that you're on track to meet your goals. Adjust your plan as needed. Adjust your plan as needed to reflect changes in your income, expenses, or financial goals. For example, you may need to adjust your budget or savings rate if your income changes or you have unexpected expenses. Work with a financial advisor. Work with a financial advisor to help you monitor and adjust your financial plan. A financial advisor can provide expert guidance and help you make informed decisions about your finances. Stay informed. Stay informed about changes in tax laws, investment strategies, and other financial topics that may impact your financial plan. By monitoring and adjusting your financial plan regularly, you can stay on track towards your financial goals and adjust your plan as needed to reflect changes in your life. It's important to be flexible and open to adjusting your plan as your priorities and goals evolve over time. Congratulations on taking the first step towards financial freedom by learning more about financial planning. It's easy to feel overwhelmed or unsure about where to start, but the most important thing is to take action and get started on your financial journey. Here are a few tips to help you take action. Set achievable goals. Start by setting achievable financial goals, such as creating a budget or starting an emergency fund. Breaking down your goals into smaller, achievable steps can make them less daunting. Take one step at a time. Don't try to tackle all your financial goals at once. Instead, focus on taking one step at a time and building momentum. Start small. If you're new to financial planning, start with small changes, such as cutting back on unnecessary expenses or increasing your savings rate by a few percentage points. Get help if you need it. Don't be afraid to seek help if you need it. A financial advisor or other financial professional can provide expert guidance and help you create a plan that's tailored to your individual needs and goals. Remember that financial planning is a journey, not a destination. By taking small, consistent steps towards your financial goals, you can build a strong financial foundation that will serve you for years to come. So don't wait, take action today and start on your path towards financial freedom. Thank you for watching this video on financial planning. I hope you found the information helpful and informative. If you want to learn more about personal finance and financial planning, be sure to subscribe to this channel for more videos like this one. By subscribing, you'll be notified when we release new videos that can help you on your financial journey. So hit the subscribe button and join our community of like-minded individuals who are committed to achieving their financial goals. Thanks again for watching.